Good afternoon. Good afternoon and welcome to another CSU Bakersfield Sbdc Managing Your Small Business Through the Pandemic, webinar number 62. Wow, 62. So good afternoon. I'm Kelly Bearden. I'll be your host and presenter today. I am the director of the CSU Bakersfield Sbdc, located in downtown Bakersfield, California. So thank you for joining us today. We're going to go through a lot of the pandemic relief. We kind of like the stuff we've gone over the last 61 weeks, but a little different, of course. We are part of America's Sbdc program. America's Small Business Development Center program is in all 50 states and many U.S. territories. In California, there are 5 regions. We're part of the Central California region. The Central California region is 14 counties in the center of the state. And the entire center of the state, ranging from the Pacific Ocean to the state of Nevada, all the way down to Kern County in the south, the southern San Joaquin Valley, up to the top of Mono County in the Eastern Sierra. So we're here today because of a variety of our special sponsors, and we give them recognition when we can. County of Kern, Mid-State Development Corporation, CSUB's School of Business and Public Administration. We are powered by SBA, and also we are a proud partner of the Governor's Office of Business and Economic Development. So, wow, here we go again. What's new today? It's new today, May 19th, 2021. Well, we're winding down. We have 12 days left of the PPP 2021 funding. It's still available. We're still referring people to Lendistry, and we'll go through a few of those examples of why we're still referring. We're still seeing a lot of the smallest businesses out there get in on this. So it is reassuring and it is helpful that we are seeing a lot of businesses that really didn't be able to apply for the first time. It wasn't maybe worth their while. Rules changed for Schedule C filers. Others are finding out about it. We're still seeing a lot of people getting their first draw, their first crack at PPP, nearly 14 months after the pandemic began. So that's still available. A lot happening in the Restaurant Revitalization Fund. The portal is still open. We'll go through a lot of the statistics in a little while and look at the numbers and see what's going on in those regards. Also, we have still some EIDL solutions moving forward. We're going to see EIDL a lot this summer. I think that there's a lot of inquiries, a lot of things going on. EIDL will be available until the end of this year, whereas we're starting to see a lot of programs wrap up with the PPP at the end of this month. And we're also seeing the Restaurant Revitalization Fund kind of wind down, so to speak. The SVOG program remains open, but it is starting to wind down as well. So a lot of our funding programs are kind of running its course as we move toward reopening our economy in June. It's great to have it open now. Let's see our small businesses open everywhere, and it's a great sight to see. So today, and also, into June, we're going to be seeing a lot of a shift toward PPP forgiveness and then managing the existing programs that we have, looking at resources available to help us in this it's going to be a new economy. It's going to be different. What are the changes that are going to affect your businesses? These are the things that we're going to be addressing in the months to come. Talk also about the ERTC, the Employee Retention Tax Credit, which is running until June 30th for the first 2 months of 2021. And also there is still the opportunity for ERTC for 2020. So first and second quarter are open for 2021. We're going to take your questions today, and no poll today. I got that email. I hear you loud and clear. It's like, can you ever end a webinar on time? And I guess the answer is no, because none of them have ended early anyway. We have never had any of the previous 61 webinars end before 1 o'clock. So who knows? Potentially today, and maybe by not having a poll, that is the ticket. But we are going to start a new segment today. And that is going to be your emailed questions. And when you email me a question, of course, my email is on the bottom of the actual e-blast that goes out that many of you sign up to. So you'll see my email address, kbearden@csub.edu. And you can submit a question in advance. What we're going to start doing is we're going to probably have more guests in June and July and onward. And so more guest speakers, and then we're going to try to answer some of your emailed questions before we get into that segment. So maybe not all of them, and we'll take still some at the end. You can put your questions in the Q&A box. Our chat box is going to start getting loaded up with resources. Our producer, Maureen Busher-Dang, will be actually loading up that box and putting a lot of resources in there, including some of the questions that she's going to be surprised at that are asked, including this one. So I believe our questions today are going to be EIDL related. So I tried submitting an application that was sent from what I thought was the first round last year, but they seem to want me to apply as a nonprofit, which you are not. I keep receiving notices and to complete my application, but I'm not sure what to do. Okay, now, if I apply and I am approved for PPP, is PPP still available? Let's answer that part first. So yes, if you receive an EIDL, or who knows, this maybe isn't an EIDL question. It's a little bit of a open-ended question to where it could have been a couple of different programs. That's why I kind of like this one. So we'll answer it from a couple of different perspectives. First and foremost, you can have a PPP loan, a Ppp First Draw, a Ppp Second Draw, and an EIDL. And for that matter, you can have a targeted EIDL. You can have an EIDL from 2020, an EIDL advance, and you can have the supplemental. So all of those can work interchangeably. All those federal programs do work interchangeably. You can have access to all of those. So you tried submitting an application. I'm assuming that's going to be, since it was last year, it's going to be the EIDL program. It could have been the California Relief Grant Program, which technically opened on December 30th, but it is closed now, so that won't do any good anyway. So let's stick with the EIDL format for this question. So the best way to do it is not to go in and reapply. I'm going to say this twice, because we are getting this in a lot of different questions, and we did receive a lot of EIDL questions along the same format. So what you want to do is you want to contact the SBA disaster unit, either by their SBA email address for disaster, and that'll soon be in the chat, I am sure, along with their toll-free number. That is the best way to contact them and to ask them for advice. Now, the EIDL corresponding these days is a little bit slow. It's a little bit crowded. A lot of people are looking to increase the size of their EIDL. They're wondering if they're having problems with the EIDL advance, or now even supplemental advance is coming into play. So your targeted EIDL advance or your supplemental advance, increasing the EIDL size, or any problems that you've had in EIDL. First course of recourse would be go to the toll-free number or to the email address. Those are your best courses. So that is the EIDL question. And we also had more EIDL questions that I just kind of consolidated and gave you the same answer. Being a new segment, we figured we'd just start off with a couple of relatively easy questions that are in common demand right now. But other questions can go to the Q&A box, and we'll get those in the end of the show. So it's turned down for the EIDL last year. Can I reapply? Again, please do not reapply. Reapplying for any pandemic program, unless it's going after like the second PPP for the second draw PPP, usually is not having a good outcome. Because usually with the amount of fraud that's been out in early on in the pandemic programs, and now the tightening up of all these programs, we see now that that is one way to do it, is to really kind of tighten up, and by having multiple identification numbers in the system pulls a red flag. So your EIDL contact will be in there, and so there's your email questions of the day. If you want to submit a question in the future, just submit one and we will include this in webinars starting in June. So there you go. Early questions answered by email. And this way, hey, I don't forget, because I know many of you send in those questions and sometimes print them out, have them ready, but hit the Q&A box. And we also look in the chat box for questions at the end. And sometimes they're just forgotten, but not now. So let's talk about our key stimulus programs and what's going on in them. A regular feature for 2021 has been kind of a status and the action you need to take or should take as a small business owner if you're interested in one of these particular programs, or if you can apply for them and are eligible. So number one would be the Ppp First Draw. And that, again, is open. A lot of people think that closed 2 weeks ago on May 5th. And what we found out is that it's still open for those that apply through a CDFI. That acronym stands for a Community Development Financial Institution. Those lenders are generally nonprofits, and they make smaller loans. And the one that we're seeing is open and continuing to have results with is lendistry.com. That is also true for the second draw. A wide variety of users. If you have any questions, there's a toll-free number for Lendistry. We've been pushing it out since May 6th, and also the portal, but go to lendistry.com. If you can find another one and you want to go somewhere else, that's great. But a lot of people that are applying for PPP in the state of California applied for the California Relief Grant. That was handled by Lendistry. Little rough patches at first, but it kind of has rolled into a smooth kind of program to where a lot of people are getting funded now. But the key is Lendistry has your information. They have your documentation on file that you have already submitted. And my understanding is that when you apply through them, they're able to access that information and make the process a little smoother. So for California, even though Lendistry is accepting those in all 50 states, you heard me give a disclaimer a few weeks back about we are not associated with Lendistry. We do not make any money by referring them. We're just looking out for the best interest of our clients, and the best interest of our clients is to receive PPP funding, even if they're not our clients. If you know a small business out there, please refer them to them, particularly if they're a small small for-profit business that has not been able to access PPP or other programs at this time. Okay, your venues, $16 billion grant program, also known as the Shuttered Venues Operators Grant, is open and you can apply. We'll have some statistics on that coming up. Got numbers all over the place today. But got some statistics. It's really, I think, and I'm going to probably mention this twice, but I really think it's an opportunity for a lot of you museums out there and other cultural activities. This program is a difficult program to navigate. SBA has called it its most difficult grant program they've ever administered. And it's reflected in the numbers and the fact that there's still money available. We're encouraging people, even if you think that there might be a chance that you aren't eligible to apply, to still apply. A lot of the rules and regulations are kind of, well, somewhat, it seems anyway, counterproductive toward funding some of these venues that have been damaged financially over the last year, 14 months. So we're encouraging people to still apply. The Restaurant Revitalization Fund program we've talked about for a good part of 2021. And this particular fund opened on actually the 3rd of May. They are still accepting priority applications through May 24th for a variety of different groups. We'll go over those. We'll go after what they have received already. So there's a lot going on in the Restaurant Revitalization Fund. Funding for that program right now is not as available as the venues. And we'll go through a lot of the numbers and maybe some of the things that you might want to look at before you can jump in. Again, it's an easy process. The portal is relatively simple and straightforward, and we're finding people get in and having great deals of success with that. Oh, the employee retention tax credit. Boy, everybody's getting a little more excited about this particular program. They're starting to see the results and starting to see how, if you manage your PPP, if you manage it potentially to where you have maybe less of the amount of your fundings for PPP used for payroll, and maybe that entire 40% that you're actually being given an opportunity to access that particular program. So it comes down to a strategy and strategizing on your PPP for your forgiveness that we'll talk about a little bit later, about how maybe your strategy is to use that 60% for payroll for your PPP, which you're going to need if you want 100%, but then also use the other 40% over your covered period, which is 24 weeks from the time you receive the money, then actually moving that forward and actually utilizing some employee cost and receiving the refundable tax credit, not a credit against future years' taxes, but actually a refundable tax credit now. As I mentioned, EIDL is opened until December 31st. The EIDL program, we're a big fan of the EIDL program, big fan of money at 3.75% for working capital, notes payable, and a few other uses. 30-year term really works well with the cash flow. The loan costs $100 to take out. Usually you get a UCC filing on that particular your assets. So your assets are loosely secured by SBA. It's not like they are on your pink slip of your vehicles or your equipment for your business. It's not like they're on your property. They're not on your real estate, but they are on there as a lien. So you need to keep that in mind in dealing with a lot of your assets. So it does remain open and is supposed to remain open until December 31st. The Targeted Advance program is open. SBA is emailing. Also, what you want is to know is that the new Supplemental Targeted Advance is starting to open up. And all these are causing a toll on the timeline on some of these. We're finding that it's taking a little bit longer. For a long time, the pressure was off of EIDL, and there wasn't a lot going on as we kind of slowed into some of these other programs. But now the pressure is on, and expect waits and delays in getting this actually accomplished. So if you're contacted by SBA, they'll give you the next steps. There's still an application process in order to get that particular funding, but that is opening. The California Relief Grant Program closed round 6, its final round. There are new things coming from the state of California potentially, and we'll talk about that potentially in early June, but we'll let you know. Lendistry is still notifying and still closing loans for the California Relief Program. So if you were waitlisted, there's still an opportunity that you will receive funding. Hey, the Family Leave Tax Credit is open. I'll leave it at that. The city of Bakersfield has their Restart Loan to Grant program, and it is open, and you're going to want to contact Access Plus Capital. They have an office in downtown Bakersfield. Call the downtown office and talk to Eddie. Eddie can get you set up. I heard they had a lot of approvals, and now they're starting a funding process for those. So that's a program that continues to be open. PPP forgiveness is open for 2020. Recall, it is going to be due 10 months from the end of your covered period. Your end of your covered period varies, and we'll get into that. Most people elect the 24-week covered period. So that is 24 weeks or 167 days from the date that you received funding for that particular program. And PUA unemployment for contractors is open until 9/5. So let's jump in and look at some of the things that are going on with PPP, the newest numbers. Newest numbers are out, and we do have some additions from last week as PPP grows a little bit. Total loans now are over 6 million with a total dollar amount of $265 billion with an average of 43,975. which is less than half of what PPP 2020 was, if you recall. PPP 2020, basically around the 96,000 mark where it ended up. And so the loans and the PPP program has found a way to find its way, as it kind of did through 2020. If you recall, the average started out and was up in the $140,000 range and slowly dropped during the 2020 calendar year until the program ended on August the 8th, 2020. And it fell down to 96,000, less than half of that now. So we look at the last week and we see about 330,000 loan approved for 5.8 billion. And look at that average, 17,824. That's telling me a lot of the sole proprietors are getting the word. They're getting the word at least on a national level. Hopefully we're getting it to them locally. But your small mom and pops and your small businesses are able to now access PPP, where many of them couldn't do it last year. So average 17,824 for the last week. There's still money in that particular program, and there's still opportunities. And I know we've talked about this the last several weeks, and this is probably the last week I'll do this, but there's still opportunities for PPP. And the reason is because your smaller businesses, your sole proprietors that don't elect anything else, they go into business and you are automatically a sole proprietor. You have to elect to be something different. You have to do a filing with the Secretary of State's office in the form of an LLC or a corporation, be it an S Corp or a C Corp, or, others, partnerships, limited partnerships, and other entities. But if you're a sole proprietor, you can now use the gross income, which has a dramatic effect on the smaller firm's ability to get close to that $20,833, which is the maximum for any sole proprietor, any business owner, I should say, be it any type of business entity. 20,833 was it. So there's other opportunities, because some people can still use that draft 2020, although your taxes were due on Monday. So that was kind of the reason why you could get by with using a draft. I'm assuming you still can. If you only have an actual tax return for 2019 Schedule C, you can file for the PPP 2021 based on how your tax returns is going to look like when it's filed. Again, draft might not be the proper word. It's how your tax return is going to look like when it is filed. It needs to be that accurate version that just hasn't been filed. So those are the opportunities that are still available through PPP. So a couple of examples. This has only been available since March 3rd, and there are a lot of individuals that really kind of have been left behind because there has been no guidance and nothing added to that. I'm under the impression that their PPP, when it ends on May 31st, it is over. I don't think the restaurant revitalization, now this is my personal belief, but I don't think any of the pandemic-related programs on a federal level are going to be extended. So they're over when they're over. The one hope that people continue to push is that individuals who filed back in January up to March 2nd as a sole proprietor and were not able to access the new calculations on March 3rd might be able to access that. So they might do a retro. That's the one thing people are holding out for, but there's really not a lot of energy moving forward on that to really help things. Some of the other businesses that really can be helped by Schedule C, if you had an extraordinary item on your tax return, your Schedule C in 2019, maybe it was a lawsuit, maybe it was a high premium on insurance for some reason or another, maybe a loss you had in your business, a lot of things that could have happened. that were extraordinary, that don't really happen in normal years. And it really affected the numbers. It affected your numbers substantially on actually what was going on. So maybe that will help you be able to go in and actually use the Schedule C method of gross income to get a larger amount. And, I talk a lot about the 2833 because that is the amount, the maximum amount, again, for business owners. If you have employees, there's an additional amount that would be added to that for your Ppp first or second draw for those that haven't accessed. You might have been a business in 2019 and used some really good tax planning to reduce your taxable income. And you still could have had, your earnings and your cash flow, but not a taxable income that actually would support the PPP. That could have happened in 2019. So a lot of reasons on why that could have happened. Okay, moving to the shuttered venues. And when we jump into the spreadsheet a little bit today, and we'll show you an example of exactly how that works on that PPP. This is my last chance. Please reach out to those that are very small businesses and didn't know about it, and let them know. They have basically 13 days left. Okay, shuttered venue operators grant. Here's the numbers on that. SBA at last report. This was from a call I was on with Washington, D.C. SVOC people last Thursday, and they had received 12,000 applications and money was still available. Okay, so, really, I still think that there's an opportunity here. We've had very few, to be quite frank, very few shuttered venue operator grant applications that I'm aware of. And one of the reasons is the intimidated process. And it's, again, it's a very difficult grant. I mean, when you talk about dozens of pages of FAQs to go through, but there's still an opportunity. And what we're doing is we're trying to just make one last push out to businesses out there who might be able to think that they are not able to apply. If you think you're not able to apply, you'll be turned down through the portal or the process. So, it's still my contention is that it's not a lot of time to jump in and do this. And it is better to go through the portal process and to be turned down, even if it is in the portal. At least you gave it that effort, and it could surprise you with the end result. So one area where I think there's still potentially some benefit here are our local nonprofits, particularly the cultural related, museums, and other types of centers that can apply through this process. So if you do the formula and do the math on it, and it shows that you did have a loss, it's still an opportunity for you to get in. Again, you cannot apply for the Shuttered Venue Operators Grant if you received or applied for the Restaurant Revitalization Fund. And no, fund does not begin with a V. So also, if you received a PPP for 2021, that will be deducted from your proceeds. So Shuttered Venue Operators Grant, again, the applications are being accepted. There is a priority based on the amount of loss that you sustained. The largest ones that had the largest losses compared to revenue in 2020 compared to 2019 will be given the highest priority. Then applications will be on a first come, first served basis. You need to go into the account and into the portal and create an account, and then answer the questions in the portal, upload documents that include budget, floor plan, financial docs, and others. If you have a very specific question, please let me know. Put it in the Q&A or email me specifically. I will be attending again the Shuttered Venue Operating Grant office hours that they have for technical service providers around the country. So I will be there tomorrow and find out the latest on what's going on with Shuttered Venue Operators Grant. Still has funding and is apparently going to remain open until the funding is gone on this particular program. So as we have talked about, a lot of interest still remains in the EIDL program. So some of the changes for 2021 is, when the EIDL grant or EIDL program first came out with the EIDL loan back in mid-March, EIDL was considered a 6-month program. There was the common view there that the PPP would be an 8-week program. EIDL would be a 6-month program, and then we'd be beyond the pandemic and all our dreams would come true. Well, it wasn't quite that way. So now EIDL is now considered a 24-month program. It's a 24-month period for you to expend your EIDL funds. Now, there still needs to be an accounting of those funds, and they cannot be funds that were used for any other grant-related program, be it a federal, state, or local program. So keep that in mind and read your documents that you have. You have a signed document, the EIDL actually note. So read your note and find out what's going on there with what you can use it for. Typically, it's for working capital over this time period, and also for current notes receivables. So you can be paying on equipment, you can be paying a note on your building, you can be paying a note on any other business-related asset. Now, you can't prepay any of those down, but you can pay the current month period over a 24-month period. So again, EIDL payment has been deferred, so there will be no deferments until 2022. Actually, no payments. The deferment is until next year, but interest still accrues at the 3.75% interest rate for small businesses and 2.75% for nonprofits. Your targeted EIDL and supplemental grant have now been introduced in 2021. Targeted EIDL is moving right along. The supplemental targeted EIDL is now out and about. Recall the extra $5,000. SBA does this by initiating an invitation. So what they're doing is going through their system and finding individuals in the U.S. Census tracts that show that they're in a low-income area. We call it the EIDL map, and people that are in there are given that opportunity to apply. Now, sometimes even people outside that opportunity are given an opportunity to apply. Again, I go back to if you look at the map that they're proposing and it's outside of that area, then, don't worry about it. So, I would continue to, look at applying through the process if you're given an invitation. The EIDL maximum loan did increase from $150,000 to $500,000. We've talked a lot about how kind of the chronology of the EIDL loan program has worked. Initially, in mid-March of 2020, it came out and the EIDL program was for $500,000. It changed with the passage in early April of the CARES Act, and then the program subsequently dropped to about $350,000 and then ultimately down to $150,000 where it resided. Now businesses are given the opportunity to go in and actually, increase the size, seek an increase. The EIDL loan is basically scored on the gross profit of the business. So again, we're going off of gross profit, which again is very simply your revenues minus your cost of goods sold. So the EIDL program also, the change in 2021 was that it was extended until 2021. Okay, so there's your, your COVID EIDL increase requests. And again, there's an S on that. So email COVID EIDL email request at sba.gov. You can log into your portal, your personal SBA portal, and actually click to request additional funds. You want to disclose any changes in ownership, if you maybe have a bankruptcy since then that's happened or something like that. They'll want to know what type of tax filing, tax form you file, be it an 1112 20S, which is a tax filing for a subchapter S corporation, 1065 for a partnership, your 1040 Schedule C, or then you will also need to complete the IRS Form 4506T, which authorizes the SBA to pull your taxable income and your tax return and use it for consideration. So some of the new supplemental and targeted EIDL advance, targeted EIDL advance that benefited. If you receive the targeted EIDL advance, you're very likely to get an email for the supplemental targeted advance. So basically a few more strings on it, but it does add a potential for a $5,000 to the targeted EIDL advance, which is viewed as a grant and is not repaid. It is not added to your PPP for repayment. It is pure and simple called the targeted EIDL advance, but it is a grant. So again, you have to be located in those low-income communities. You have to have suffered a loss of greater than 50%. 50% loss of revenue from 2019 to 2020. So your revenue dropped in half during any 8-week period during that time frame, and you cannot employ more than 10 people. If you are declined for your EIDL reconsideration, you can, for your targeted advance. So if you are actually declined, you can get reconsideration by emailing targeted advance reevaluation@sba.gov. Yes, different email addresses depending on what your issue is and what you're trying to resolve, whether a size, whether an actual EIDL loan, a targeted advance. So anyway, different email addresses, and I think we've went through 3 of them today. In your subject line, what you're going to want to do is in the text, put your 10-digit application number. So if your application number is 3 and 9 2s after that, that's your number. Include in the body of your email information on why SBA says you were declined for that, and then try to address that particular issue of the reason for the decline and use that as an opportunity to try to sway that decision. So if you feel like you should not have been declined, do support yourself and jump in there and go through that particular process. Okay, the RRF, there were a lot of applications early. We went through the first 2 days. Now we're looking at the stats that are coming in. So whereas with the Shuttered venue that had 12,000 applications over several weeks, the RRF program had 147,000 just from women, veterans, socially economic disadvantaged business owners requesting $29 billion in relief funds. So there was a priority period, and it looks like the priority period is going to go entirely to those that have applications for women, veterans, and socially economic disadvantaged business owners. Not good news if you're not in that group. The funds at $29 billion. Now, the one thing is, those are applications. Those aren't approved loans. So if a third of those are not actually eligible, they might find some reason there might not be eligible, or there is a incorrect amount listed for, say, a PPP that needs to be reduced. Maybe there'll be funds available. So to this point, and this date, the date for this is back on May 14th. Last Friday is when this came out. 2.7 billion in relief funds have been distributed to 21,000 restaurants. And then again, we see our set aside. So 2 additional funds set up by SBA Administrator Isabel Casillas Guzman, and that includes $500 million for applicants that have 2019 gross receipts less than 50,000, and then also $4 billion available for those in that gross receipts range of 500 and 1.5. Not sure how that's shaking out, but again, remember when PPP closed, there were still funds available in some of these pools that were available, and we might see that with RRF as well. So as you see, wow, over 100,000 applications from businesses under 500,000 in annual pre-pandemic revenue, 61,000 in that 500,000 to 1.5. It sure looks like funds are gone from this particular program. But still, SBA is saying that it has potentially funding available for eligible restaurants that receipts of not more than 50,000. So whereas SBA has come out and said it looks like most of our money, if not all of it, is gone, we still have some for 50,000 and under for restaurants, Restaurant Revitalization Fund. So really, it's kind of a pointless exercise to go through who is eligible. If you're 50,000 and under, I'd encourage you to go back through our YouTube channel and look at our last couple of webinars, maybe our last 3 or 4 that have an extensive Restaurant Revitalization Fund. And it'll go through a lot of this where you can apply directly through a variety of sources, including restaurants.sba.gov and also through a point of sale. And really, these priority groups are the ones that are open along with this set aside right here for $5 billion is set aside for applicants with a 2019 gross receipts of not more than 500,000. Now, I don't know if that's going to be prorated if you opened up your restaurant in December. If you opened up your restaurant in December and had 100,000 in sales, I don't know if they'll prorate that out to an annual of 1.2 million, like they've done in some of the other calculations. So the priority groups, we've kind of gone through that. And I'm just going to jump through this stuff really quickly and kind of move on to some of this other stuff that we want to talk about today. There are 3 ways to calculate it. If you do have that 50,000, this would be the calculation. And again, so they are using the times 12 gross receipts method, and that was to compare against 2020. So I would assume your gross receipts under 50,000 need to be on an annual basis, or they will likely prorate that, as they did when comparing your loss. So it was very advantageous when comparing a loss for a restaurant that opened in 2019. So there are the documentation that you're going to need. Again, we'll leave that up there. There's your toll-free number for the center hotline for SBA. You can call them and ask them if funds are available before applying. That might be something you want to do since the information we have now is about 5 days old. So let's get into forgiveness and talk the rest of the time on forgiveness and some of the things to go over here. We haven't talked on forgiveness, I hope, forever. Forgiveness, man. It should be a song or something. But here's the basic timeline that we have been using, and it's still useful, except this was the one for 2020. So again, for 2020, it's 24 weeks to use the funds, or by December 31st, 2020. And that would have been if you took out the funds on August the 7th, which is really the day before the program ended for 2020 PPP. So a 10-week window from the end of your covered period to actually do your PPP forgiveness application. We would recommend probably a little bit before that, but there's still about 1/3 of us that still have not applied for forgiveness. We have 60 days for the lender to verify our application and upload it to the SBA portal, and then 90 days for SBA to review it and make the final decision. So a couple things to remember here, maybe even a dozen, is the PPP program intent was to, as the payroll protection program, the intent was to actually protect payroll, to keep our workforce in place and ready to go in the event that the pandemic ended, and ended sooner than we had ended up ending. So maybe, it's lasted longer than it has, but the intent was to keep paying individuals and to keep kind of a salary for business owners as well. Recall last year we had two very significant changes to PPP forgiveness, and that was the Ppp Flexibility Act passed by Congress and enacted on June 5th. And then we also had the economic, what was it? The Economic Act. How soon we forget. That actually was enacted in December 27, 2020. So you're going to want to choose your PPP period. It is an election. Most people are electing 2020 PPP to be 24 weeks. If your PPP originated any day after June 5th, it is automatically a 24-week covered period. But since June 3rd, since April 3rd and actually June 5th, it was an 8-week period. Some businesses can elect an 8-week period, and they would like the 8-week period. So again, you're going to need to meet or exceed a 60% payroll figure for that period. And really, you need to understand the owner salary limits, of which is for any owner, the salary limit's going to be $20,833, and that is for a 24-week covered period, or $15,385 for an 8-week covered period. You know, we've talked a little bit about managing your PPP, that you have expense flexibility in how you arrange it. That flexibility got greater with the Economic Act of 2020. So there are actually more items that you can use for PPP forgiveness now. But there's the first 5. And then you're going to want to select the appropriate forgiveness form. There are 3 forms. Form 3508 is generally being used for those PPPs that are over 150,000. There is still a process to go through, either if you elect either of the 2 safe havens, or if you use the actual employee count. We'll get into a little of that, and a lot of that in June. So gather your documentation to support your forgiveness. There is documentation required. Work with your lender or any other third party to kind of help you. You're going to have to certify that the funds were needed, that when you took these funds, that the economic uncertainty at that time for your business was that you were not sure your business was going to survive. And for a lot of those that happened way back in 2020 and even early in 2021, there was a lot of question about if people were going to make it and if there was going to be money to go around and if the pandemic was going to be handled in a financial means as readily as it has for small businesses. So please remember there are resources to help. And I always like to say, remember how you applied. And we're going to look at that in just a second. But time is on your side. It's 10 months from the end of the covered period, but you don't want to miss that 10-month period. But time is on your side. A few other things real quickly is and we kind of covered this, your first draw PPP forgiveness terms, pretty much covered in all that. And your second draw terms, pretty much the same thing that we just discussed. So I'm not going to really elaborate here, but I will talk a little bit about next week. Hey, next week, May 26, 2021, special guest host is going to be Keith Bryce. Always brings great entertainment, great information, and also a lot on what's going on in the lender world. So next week, our special guest host, the very competent Keith Bryce, will be here. And until then, let's jump into kind of a new share here and look at our PPP by the numbers. So you recall PPP by the numbers if you've been around for a while. This has been kind of our go-to kind of description on giving kind of a quantitative analysis, a quantitative look, kind of a spreadsheet format to a lot of the things that have been going on with PPP forgiveness. So one of the things early on was that 8 to 24 week election. And really, most people have elected the 24 week. I think it's a very unique situation for you to go 8 weeks You still can if you had the PPP originate before June 5th. So, I call this our 3 scenarios, but it's our 4 scenarios. And this is going back to remember how you took out your PPP loan. And this is kind of a synopsis of a few different businesses, 3 different scenarios, 3 different businesses with 4 scenarios to be exact. We've used a lot of this one scenario called Kelly's Grill. And it was a business that did 1.3, had 15 full-time equivalents. And we're looking at kind of the breakdown of the profit and loss statement here. Looking at revenues, and there it is. Look at that. Gross profit, love gross profit. But revenues minus the cost of goods sold, and get your gross profit. We'll see how that changes. In this particular situation, in Kelly's Grill, you'll go down and you'll see it qualified for a $100,000 loan based on the various assumptions. We did a seasonal business for our seasonal businesses out there, but we're really turning right now to mom and pop. And here's mom and pop under 2 scenarios. Very limited sales, 240,000. Let's just say they're not a food business, because that would be the Restaurant Revitalization Program that is still open, it looks like, under the 500,000. So let's say they own a carrier business or something else. So mom and pop, 240,000 in revenues. They had purchases under cost of sales of 110,000, which left gross profit of 130,000. They had operating expenses of 110,000, which left income, basically net income, which would be line 31 on your taxes, of 20,000. This would be line 7 of your Schedule C, which now we can go off of gross profit right here, 130,000. So if you're a sole proprietor, and what I've been really talking till I'm blue in the face, is now you can get a PPP for $20,833. But the same business, if it's not one of our smallest and neediest businesses, according to the new definition on March 3rd, is that say maybe you're an LLC. And I believe it even means in the LLC that it's a single member LLC. But it falls all the way down to your amount is only $41.67. So this is just kind of like a remember how you filed, because how you filed is going to be where it comes into. Let's talk about mom and pop. Here, they are afforded $28.33. That is income to replace their salaries as owners. So the owner of the business is given the $20,833 over the 24-week term. Here it is $41.67, and this also would apply to a nonprofit if you applied before March 3rd. And that's really, I know, a big issue with a lot of you out there that did apply timely and quickly, and unfortunately received this much smaller amount. So one thing that we've been going on off of is that here was our Schedule 1, here was our PPP 1 back in 2020 for Kelly's Grill. We see the loan amount was $100,000. And that was when our PPP began, is when the funds hit our bank. So from that time, we were given 167 days from that day, 168 days total, which brought us to October 4th, which we could even go 10 months ahead of time and find out that, gee, that throws us 10 months, as we're getting pretty close to the end of our covered period if we haven't applied. You go into January 4th, and that is 7 months. So basically August the 4th is going to be the end of that period. And so time is beginning of the essence for some of these that are out there, PPP ones that are still not have been forgiven. And there's still a substantial amount. So again, you're going to want to be able to, in this example, it came up with 86% for payroll and benefits. Now, you've heard me say that now that we only need 60% for payroll, if I want to try to maximize my benefit here, manage my program the best way that I can, to where I quite possibly can apply for the ERTC, the Employer Retention Tax Credit. I might want to do that at 60% and then look at other expenditures. So again, up here, what I did was just took the normal expenditures for that payroll costs that are applicable. Here's your other expenditures for PPP 2020. Now, there's a number of other costs that came into this with the Economic Aid Act of 2020. So it's not reflected in this particular spreadsheet, but actually it will start in June. And you need to know that it can be reflected in those particular costs moving forward. So we've talked about a lot of the additional costs that now can be used for forgiveness, even back in 2020. Those include supplier cost. They include other costs of actually getting point of sale systems, delivery systems ready, and also those costs for actually opening and doing modifications and actually improvements to kind of comply with some of the COVID-19 restrictions and shutdowns that we had in place for a large part of 2020. So those all now apply. So, but this was how this forgiveness went, and it kind of already had applied, so really can't do too much. Went through this forgiveness process. You'll remember last year we thought that there was going to be a substantial amount of time that we had to actually, for everybody, this is 150 and under, we didn't really need to do the employee analysis. So it really kind of came down to right there. So that was my plan. I actually had an actual, we kind of have the spreadsheet now moving forward in 2021. That's going to be kind of with one of the things that we use in 2021. Looking at the forgiveness forms that are out there, we have the long form. This is the EZ form. And kind of went through this a little last week, but really, it's really important because it really kind of shows you how the forgiveness can change from 100,000 down to 73,000 based on meeting the payroll cost. And it also shows you that if you don't meet the 60% payroll number, your loan will still be forgiven, just not at the 100% level. It'll be on a prorated basis. So then also our 3508, see that? That's the long form. That's what I like to show as the long form. We had payroll cost. We always throw in here our wonderful cash flow forgiveness and our other forms that you can manipulate for your own purpose. But just to kind of a quick run through the spreadsheet and kind of where we are. In June, we're going to have 1 week that's solely dedicated for forgiveness for 2021 purposes. But really the critical part is the 2020 forgiveness that haven't really, those are going to be around August 1st when some of those start coming due. So please keep that in mind. And with that, let's go to your questions. And I'm going to fail in my effort to get you out of here at 12:59. Okay, first question. Found out that I had an issue when filing my 2019 tax return last year. I was told by the IRS that I didn't have to physically file it because I'm not sure with all the programs that I applied for what to do. Do you have any suggestions? Well, that's a tough question because number one, I don't have enough information. But generally, if you weren't required to file a tax return, usually self-employed people are because of the self-employment tax if you had profit. So you were told by IRS that you had to physically file it now. Okay, so I think that is kind of interesting because it's kind of even different from what I was talking about earlier, whereas the tax deadline was extended till May 17th, 2 days ago. So I don't know why you would have needed to have to file 2019 last year. So I'm sorry, I just can't. If you want to email me offline with that question, let's email me offline and let me get a better grasp of more of the facts. and we'll try to go through that. It looks like you're trying to do something with the RRF or an increased idle process. So again, on both of those, the SBA is going to go to the IRS. So if you're running into a problem to where you already filed 19 and you have maybe an amended return or something like that, that is going to throw a question or a problem into it. But do try to email me offline at kbearden@csub.edu, and we will try to get that offline. Can the SBDC help me apply for the right loan? Absolutely. Yes, go to our website, CSUB SBDC, and what we will do is assign you to a consultant. We have English and Spanish speaking clients that are consultants that can assist you. The right loan will depend on your situation, obviously. So there's time, again, is of the essence. If you have a food business that had over $500,000 in gross receipts, or if you want to apply for PPP, time is very limited. Oh, here's some good news. I was already approved for the RRF, the Restaurant Revitalization, woman-owned business. That's great news. Congratulations. Glad to hear of successful things happening. My accountant is leery to let me use the ERTC program. He says it needs more clarification, more guidance on that. Specifically, that the business must have been shut down, not just reduce sales. Do you think there'll be more guidance coming? I've been waiting for more guidance. What I would do is I would likely go back and look when we had Michael Stevenson on and see what he says about it, and then maybe get some questions and research it, and maybe see as time goes on if your accountant's position changes. But I would kind of get some other opinions as well. Specifically, the business had to be shut down and not just reduce sales. I'm not sure on that particular aspect. Received an EIDL loan and was receiving a monthly statement until they deferred payments, no longer receive a statement. Did they halt mailing them out? My guess would be yes on that, but I would maybe want to make sure, and I would call the call center, or I would send an email. So I think that would be the best way to do that. Is there any benefit to using payroll and expenses for the PPP loan forgiveness? First payroll only. So, the biggest thing I see, and I know people have used payroll only 100%. And for a long time, it seemed like a very, very good strategy, because back for a large part of 2020, there was a requirement that you could not use the PPP and the ERTC in 2020. It was the before mentioned Economic Act of 2020 that was signed into law on 12/27/20 that actually allowed them to be used in conjunction with each other. So that would be the one benefit that I would see by using both payroll and some of your other expenses. Now, again, you've got to hit that 60% number, and you want to make sure you hit that 60% number for payroll. But then also some of the operating expenses, maybe some of the supplier expenses, modifications, making your facility a little more, as we call, COVID friendly to your customers and employees, and some of those other expenditures, utilities, rent, and other items can be used maybe to the tune up to 40%, which would leave less funds, or excuse me, more funds available if you were decided to go the Employee Retention Tax Credit Act. So that's how I would do that there. Okay, let's hit the chat, and amazed by all the fine resources that our producer, Maureen Busher-Dang, puts in there. And there's a lot of EIDL links and a little more information on Lindustry and their call center information. So grab that information while it's in the chat. Grab those links. They're yours. And they'll be coming out in a subsequent email, likely by Friday this week, along with a copy of this in your email box. So I don't see any other questions. I don't see any other information. There is the webinar that we did with the CPA who actually addressed the ERTC, and that link is there as well. But there's a lot of resources available, and I'll check with many of those. But that's going to do it for now. Another 62 in a row of not ending this thing early, or potentially even on time for all I know. But that's the way she works. So next week, very happy to report. Next week we will have Keith Bryce here. Keith is a great change of pace for you, and a remarkable job he does. So for Maureen Busher-Dang, our producer, I'm Kelly Bearden. Have a great day, and we'll see you soon. Bye-bye now.